Trump and gold. We believe, and again, we don't know, but we believe that he's going to do what he always does. By their deeds you shall know them. And he's always pushed the Fed to lower interest rates. So if the Fed lowers interest rates, the dollar, which had gotten stronger, goes down. The deeper the dollar falls, the higher gold prices go. End of story. So again, right now it's a guessing game. What's going to go on?
Recently, gold prices have experienced a notable 5% decline, driven by a stronger US dollar and shifting investor preferences. This decline mirrors the behavior of gold in 2016, when Donald Trump's presidential election led to a drop of up to 12% before the precious metal eventually bottomed out. Similarly, silver followed a similar trajectory, falling by approximately 13% during that period. According to GERALD CELENTE, an American trend forecaster and publisher of the Trends Journal, one of the main factors influencing gold price fluctuations during such times is the U.S. Federal Reserve's monetary policy, particularly its decisions regarding interest rates. Historically, when the Federal Reserve lowers interest rates, the value of the U.S. dollar tends to rise, making gold less appealing as an investment. Since President Trump's election, speculation has increased that his America First policies could strengthen the U.S. dollar. The dollar index rose 3% following the election, buoyed by expectations of a more robust economy. However, recent market trends indicate that this momentum may be slowing, with the dollar index now hovering just below 106.5 points, reflecting a minor decline. On the other hand, gold has shown resilience, climbing back above $2,600 per ounce, with December gold futures recently trading at $2,616.40, marking an almost 2% increase on the day. Despite the Federal Reserve's ongoing monetary easing, some experts predict that the central bank may raise interest rates again if inflation picks up, potentially leading to an economic slowdown. Despite these challenges, gold remains a strong asset. Celente believes that markets had anticipated several rate cuts by the Federal Reserve at the beginning of the year. Even as those expectations have been adjusted, gold has experienced its most significant rally since 1979. This suggests that gold remains attractive to investors even in a low-interest rate environment. The relationship between the US dollar and gold prices remains inverse. When the dollar weakens, gold prices tend to rise. As we bring you clips from the discussion, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this.
The markets, well, they were down a bit today. Let's see. The Dow was down 207 points. The S&P 0.6, not big. The NASDAQ down 0.64. And the reason being, they say, is that the Fed head, Jerome Powell, said today, quote, "The strength we are currently seeing in the economy gives us the ability to approach our decisions carefully," meaning how they're going to lower interest rates. And before he said that, the street was betting 82.5% earlier in the day that they'd lower them another 25 basis points next month. And now that number's dropped down to 62%. The CPI is up 3.3% for the year. Okay, so let's go back to what Powell said. The strength we are currently seeing in the economy. Strength? Didn't Trump just win the election? And why did he win the election? Well, because as the cover of the Trends Journal this week shows, it's the plantation workers of Slavelandia that are broke. And they say Biden busted them. So there you go. So who's bullshitting? They said the economy's strong, but not according to the people. And again, as I said before, when the Republicans lost the midterms in 2022, you had inflation at 9%, and Biden's poll ratings were in the toilet. But again, it was the abortion issue that wasn't an issue this time. It was the economy, stupid. So I guess what Powell is saying is nothing more than a lot of, yep, because it ain't what's going on. Gold's taking a hit. Again, as I say, nobody can predict the future. There are too many wild cards. Trump coming into office, the whole game changed. He's talking about peace. So the fear of global war, that's gone down a bit. But again, we'll get to that. The people that he's picking are pretty war hawkish. Maybe there'll be some peace in in Ukraine, but not in the Middle East. But anyway, when Trump is not, Trump is in positive a bet for gold. Some of the data here, gold's down 5%. And that's what happened back in 2016 when he got elected, and it bottomed out. It went down 12% before it bottomed. And back then, silver fell 13%. So Trump's not a positive one for gold. And what did Bitcoin do today? Yeah, Bitcoin went down a bit, but it's still way up there. So what? As we went on the air, it's at 87,750. And Brent crude ain't doing great. $72 a barrel, basically, because the global economy is slowing down. So it goes back to Trump and gold. We believe, and again, we don't know, but we believe that he's going to do what he always does. By their deeds you shall know them. And he's always pushed the Fed to lower interest rates. So if the Fed lowers interest rates, the dollar, which had gotten stronger, goes down. The deeper the dollar falls, the higher gold prices go. End of story. So again, right now it's a guessing game. What's going to go on?
In October, the U.S. economy achieved a soft landing, where inflation was successfully reduced without stalling economic growth or precipitating a recession. While there has been significant improvement in the economy over the past 2 years, consumer prices have not fully recovered from the high inflation levels that peaked in June 2022. As a result, many Americans face diminished purchasing power, prompting increased side hustles and reliance on credit cards to cover daily expenses. However, carrying substantial credit card debt can quickly become unmanageable, leading to more severe financial problems for households. In the third quarter of 2024, total U.S. household debt reached $17.94 trillion, marking a nearly $150 billion increase from the previous quarter. The debt-to-income ratio, the proportion of income spent on debt repayment, decreased to 82%, down from 86% before the COVID-19 pandemic. During the Great Recession, this ratio was a concerning 120%. Despite this improvement, credit card debt increased by $24 billion, and auto loans rose by $18 billion, indicating that many households struggle with non-housing-related debt. Economists observe rising delinquency rates as a troubling sign of financial strain, pointing to Americans' increasing difficulties in managing their financial obligations.
Again, what Powell said about the strong economy, credit card debt hits $1.7 trillion. Yep, that's up over 8% from a year ago. Canada faces 15.4% jump in personal insolvencies. We're mentioning this as a global slowdown. A global slowdown. 2 articles came out, one in Vogue about the luxury goods market has lost some 50 million consumers this year. And another article came out saying basically luxury good markets facing its first slowdown since the panic of '08. We've been writing about this in your Trends Journal now for over a year. And now it's just making the news. And again, totally out of the news. Not a word about it is the office building bust. Not a word. And that's going to bring down the banks. So people ask, where's the markets going? There are wild cards out there. And will they be played this year? Time will tell. Takeover by Verizon, get shareholder approval. Yeah. Wonder Near's deal to acquire Grubhub. BioNTech strikes $950 million China deal. Again, we mention this because all it is the big's getting bigger. And China, by the way, as we said, the business of China's business until, of course, they launched the COVID war and destroyed their economy. But now you got articles coming out in the media about how China is doing so great in South America and how they just built this huge port in Peru. And Peru's made in China megaport to transform trade. That's the Financial Times. Latin American trade is dominated by China. As we say, the business of America's war and the business of China's business. Hey, more money. We're sending more money to Ukraine, more money to Israel. Keep killing those people. Bloody the killing fields. Yep.
With expectations that the Fed may cut rates further shortly, many analysts predict that gold could see a strong rally, potentially reaching as high as $3,000 an ounce by the end of 2025, as forecasted by Goldman Sachs. This prediction is underpinned by growing central bank demand for gold and geopolitical developments, such as tensions in Eastern Europe and Asia, which could drive investors toward bullion for protection against risk. Furthermore, a potential shift in U.S. leadership under a new presidential administration, especially with policies that support fiscal stimulus, could also stimulate demand for gold. While gold has faced short-term volatility, including a recent 7% decline, analysts suggest this presents a buying opportunity as gold's long-term fundamentals remain strong. Please share your thoughts on Celente's analysis in the comments below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.